So what I want to do with the bulk of this time is hear from you thoughts and ideas about whether they're good, bad, crazy, indifferent, whatever, of ideas about what could help on your end. And this is really an offshoot of, it was either last Friday or the Fridays before MAPC Metro Mayor's call with the Lieutenant Governor. I'm on those calls, and then there's another weekly call with the MMA with the Lieutenant Governor on Tuesdays, and said something similar. Want to really start fleshing out some ideas that communities have. So that's where I want to spend the bulk of the time, but I will just go through very quickly the two municipal bills, or the two bills that had municipal items in it over the last 3 weeks or so. Just a quick summary on those, because I know most of you are familiar with it, and we've also sent out some bulletins on it. Touch very, very briefly on CARES Act. Undersecretary of A&F, Captain Hornby, spoke to Metro Mayors and MMA about this over the last week, and honestly, there's not much I can say about it other than uncertainty. And then, again, really want to spend the bulk of the time hearing about ideas that you all have. Again, they could be crazy, but we're in unprecedented times, so crazy might be good now. So the two bills that were signed into law over the last 2-3 weeks, first one was Chapter 53, and the major items in there, I won't go through all 17 sections, but the major items in there for a town to be able to push past June 30th for town meeting, which is obviously critical. Another item was the so-called 1/12 budget process. Cities already have that process available to them, so we needed to make it available to towns. We're actually in the process, and we hope to have bulletins out next week on a few items, this being one of them, on how that process is going to play out. And I can tell you that I know my guidance to my folks has been, let's keep this as simple as possible. I think you all don't want anything overly complicated to add to the list of things you got to be doing right now. But there is the opportunity, if you don't have a budget in place by June 30th, to basically keep paying the bills in July with a minimum 1/12 budget. And say minimum because you might have pension assessments in July, you might have regional school assessments in July, all your police, fire, specialty pays in July, all those types of things. So there'll be a process to go through that. Free cash, as you all know, goes away on June 30th. And what we didn't want to do was have communities that would otherwise use that. Because I know if I was still in Brookline, we used free cash for, in this case, the fiscal 21 budget, all for pay-as-you-go capital. And if this expires on June 30th, we wouldn't have had that money available to us, which would have been a major problem. So every community uses free cash differently and everything, but the point here is that it doesn't go away on June 30th, so you'll be able to, if you have any left over from the amount certified as of 7/1/19, you'll be able to use that as an available revenue source for your fiscal 21 budget. Another one, Section 7 allows a 3-year amortization of any revenue or expenditure deficit related to the emergency. Revolving funds, you have to go and get a new ceiling, or every year you got to vote. This would allow you to basically carry forward the prior year's cap. Other ones that have already been taken advantage of, the local option to extend property tax due dates. At least, the press clips I get every day see a bunch of local communities taking advantage of this. Related to that, the opportunity or the option to waive interest payments and late fees. My favorite of all, allowing beer and wine as part of takeout orders at restaurants. It's been fantastic. A little bit expensive, but it's fantastic. Another one, 960 hours, the cap on retirees that was waived. So if you need to bring back building inspectors, public health inspectors, police officers, firefighters, et cetera, you're able to bring those folks back, and that doesn't hit against their 960-hour cap. And then there was a large section in there dealing with permitting deadlines. Basically, all the deadlines were halted until the crisis is over. That was a significant concern that was raised by a lot of, particularly mayors and managers and planning directors, economic development types. So that was in there as well. So that was Chapter 53. The other one, a week or so later, was Chapter 56. Really the one that I think is of most, well, as a parent, there were a few things that were interesting, including being able to waive MCAS requirements and high school competency waivers and those types of things. But there was something in here that I think is important for those communities that are part of a regional school district. It gave DESE the ability to do a 1/12 budget for regional school districts, just as we'd be doing for cities and towns. So if you are part of a regional school district, there'll be a process where DESE will approve a minimum 1/12 budget for those regional school districts. So that's a quick overview. These bills went back and forth. There were different versions of legislation filed, but at the end of the day, I think this was a great set of bills that addressed a lot of immediate needs for municipalities. Immediately after the governor issued the executive order to allow, basically to address some of the open meeting law requirements. So I think if you take those three things together, I think it shows a real good effort at trying to address some of the short-term issues that communities face. CARES Act, and then we can spend the rest of the time, unless, Sarah, you get some other things you want to talk about. But I can give you a brief overview of the CARES Act, and I'm basically parroting what Catherine Hornby, Undersecretary, said to folks both last Friday and this Tuesday. There's $150 billion nationwide, 2.7 billion to the Commonwealth. The only community that gets the money directly is Boston, and that's because the law said you have to have a population of at least 500,000. Obviously, Boston's the only one that hits that. So they're getting or have received, one of the two, about 120 million-ish. Everybody else will need to go through a process that A&F is developing. The three simple rules, and I should say that A&F does not have a program or guidelines out yet because they're still waiting for some critical guidance from the U.S. Treasury. And as soon as that guidance is received, then they'll be able to move forward with a program and start getting money out the door. But the three real important things to remember about this is, one, it's not for revenue loss. My personal opinion is that kind of stinks because one of the issues you're all grappling with is I'm losing money on my meals tax, my lodging tax, building permits, a whole host of other locally generated receipts, maybe even motor vehicle tax, cannabis tax as well. But it's not for revenue loss. The expenses have to be incurred between, I think it was March 10th and December 30th. And then the third thing, and as a budget guy at heart, this one's really important. They can't be for budgeted expenses. So as you start planning your fiscal 21 budget, keep that in mind. I get some ideas of what I would do if I were putting a budget together right now and knowing that those monies can't be used for anything that's been budgeted. So those are the three big things to keep in mind. In terms of a program, how much money, when's it going to get out? I don't have those answers because A&F hasn't received the guidance they need from the feds. But once they do, there'll be guidance issued by A&F, and then DLS will be involved in some way, shape, or form, whether it's getting the money out, providing guidance about how to account for the monies, how to wipe out existing deficits that you have in the books, the in the weeds accounting. So we'll be doing something on that once the program is launched. So I'll pause there if there are any questions either on what has been done or on the limited knowledge that I have on CARES Act, and then we can talk about other ideas if that's okay.
Sure, thanks, Sean. There's a lot of questions coming in. Matthew Hunt, who's actually our auditor in Bedford, has fired off more questions in the last 5 minutes than I think I've seen in the last month. So we have a lot of questions that folks are asking for. I wanted to start off with representation from Somerville. I know Mayor Curtitone's on the phone and he had some questions, and then we'll try to go through as many of the questions, concerns, ideas as we can. Mayor Curtitone, are you on the line? Did you want to lead off some questions from Somerville?
Thanks, Sarah, and thank you, Sean. I don't have any questions in particular about the CARES Act, and I understand there's more guidance you're awaiting from the federal government, so I appreciate that. In general, on other questions, is it appropriate, Sarah, to put forth other questions about other legislative relief?
Absolutely.
So, Sean, I know we brought this up before on previous calls, and I know things are fluid and we're trying to get a grasp of things, so I appreciate that. And thank you for what you're doing. What are the other legislative tools the administration is considering? For example, are you considering pension appropriation forbearance or extending amortization of operational deficits or early retirement incentive? Are any of those things in the mix? And if so, where did they stand?
Well, I'll give you the same answer I did, I think, last time you raised the pension issue. That's not on at least Sean Cronin's list. What I can say about pensions is that we have had discussions with PARAC about the possibility of allowing local retirement boards to push back or forward, however you look at it, the date that the payments actually due, the assessment needs to get paid. Because a lot of you, understandably, rightfully, pay up front because it's an actuarial gain in the system. But that means a lot of cash out the door in July. So we're talking with PARAC about potentially letting retirement boards push that back until January, which will allow for some cash flow needs. But other than that, really haven't talked much about any sort of pension relief. In terms of the deficit, any deficits, what I think is going to happen is that for those communities that have deficit, emergency deficits under the statute, you send a letter to us or ask for ability to deficit spend in an emergency, you get it. When the CARES Act money comes in, you'll be able to use that to offset that deficit. So there might not be much of a deficit that would have to be either closed out in FY20 or carried forward into 21. So to the extent that there are large, well, people think that there might be large deficits to address at the end of 20. I think that either FEMA money or CARES Act money or some combination of the two will go a long way to closing those deficits. Some other thoughts that we've had, and these have come from conversations, as you know, Mayor, the one that you lead on Fridays, and then with MMAs on Tuesdays, and then my own conversations with managers and finance folks. We know that the city budget process is an issue for some. The kind of the collision of 170 days on one end and the 45 days on another end. So that's definitely something that we're working on addressing. Mayor Vigent in Marlborough had a really interesting idea that I really like, which is in his case, he's got multiple special acts that created, he calls them special revenue funds. It's kind of like special purpose stabilization funds where certain revenues go in, and what he wants is relief from that requirement in fiscal 21, which is a really interesting idea. And we're putting together language that would allow any community, whether it was through the regular statute, which is section 5B of 40, I think, or special act, to basically eliminate that dedication for fiscal 21 so that you can use that money for your general fund budget. I know some communities dedicate all their meals tax to a stabilization fund. or some of their other local receipts for whether it's a recreation fund or a fire truck fund or whatever it might be. This would allow you to use those monies for general operating purposes and take some of the pressure off of 21. Some other things that have come up.
I could just add, Sean, I'm sorry, Sam, if I could just follow up just on the two.
Yeah.
And we appreciate certainly amortizing the deficits incurred in FY20 over a 3-year period, 21, 22, 23 is helpful, but we really need you all to consider extending the ability to amortize FY21 deficits over a succeeding 3-year period. And we're in 2020, we have liquidity issues as everyone does now and coming forward. That was one. And just on the pension appropriation forbearance, if that could be considered, that option should be there in some capacity. I get it's fluid, but I just wanted to make those 2 points on that one. I don't want to occupy all the time to put some of my other questions on the chat, so I want to allow people to ask other questions as well. But Sean, on that point, I can't emphasize enough hearing from my colleagues the ability, we're all going to have deficits in 2021.
Yep, absolutely. Mayor Tyler, I know you had a question from Pittsfield, and then there are questions from Matthew Hunt, a whole list of folks afterwards. Beth Mosley, we'll try to get through as many as we can. If not, we'll happily submit everything in writing to Sean, because I know he's at a shortage of work right now. So we will forward that. Mayor Tyler, do you have your question?
Thank you so much, Sarah. I appreciate the opportunity to have this conversation. I'm like everyone else that's on this conference call, very anxious about how we're going to put forward a budget that is something I can have some confidence in. One of the challenges here in the city of Pittsfield is that we are at our levy ceiling, and I'm hoping that there will be some consideration or some sort of legislative relief for communities that are at their levy ceiling. It can obviously be for a specific period of time or specifically related to the public health crisis. So that's my first question, if Sean has any sense about whether or not there'll be some relief for communities at their levy ceiling. And my second question is about the CARES Act, and there's a $51 million set aside specifically for education, and whether or not those funds can be the formula for the disbursement of those funds can be structured in a way that communities that are either at their levy ceiling or gateway communities can have a bit more access to that resource. So thank you, Sarah.
No problem. Sean?
Take the second one first. I don't know how DESE, what the rules are around the money that is really under DESE. I can certainly forward your thoughts along to them, but I haven't heard anything on how those funds are going to be used. In terms of the levy ceiling, totally get it. I spoke with your CFO about it. My advice to him was to talk with others that are in your position, such as Holyoke and Springfield, and start educating. I know you have in the past anyway, but start educating your local legislative delegation about how the levy ceiling impacts or potentially could impact your fiscal 21 budget. But I'm certainly well aware of the issue.
Great. Matt Hunt, I know you have a bunch of questions. If you could try to consolidate some of them, anything to do with town meeting, let's hold off for now, since a lot of that is going to require legislative action beyond what Sean is doing. But if you could sort of streamline a few of your more urgent, essential questions, and then we can go next to Beth.
Okay, yeah, and I apologize for all the questions. As you might imagine, they're accumulated from clients. So they're not just necessarily coming from me.
Yep,
so let me just kind of go through my list that I'll sort of avoid town meeting questions. Just bear with me for a second here. Let's see. What about, okay, so the big topic that's come up is revolving fund deficits and how those are going to be treated. So I guess that's one question that's not necessarily town meeting related. And again, I appreciate that a lot of questions might not have answers right now.
Are you with KP Law?
No. CLA, audit firm.
Oh, okay, all right. Revolving fund deficits. So that was not addressed in chapter 53, right? That was general fund and enterprise fund. Let me get back to you on that. I want to talk with MJ to see what the thinking is. 'Cause that might end up, we might be able to address that as part of the revenue deficit portion. We purposely crafted that language to deal with not just the typical expenditure deficit, but also any revenue deficit that might come up. And it does say special revenue funds in that section of the law in chapter 53. So that might be the tie into the revolving funds, but I will check with MJ and we'll certainly get something out on that. I'll get it back to Sarah or whoever is going to be the central person on this.
Great. Matt, do you have one or two other questions? Then we can go on to Beth's questions from other municipal officials.
Okay, and also there's a lot of questions. Again, these are all coming from our clients, municipal people. So when it comes to unemployment, there's a lot of questions about that. I'll say one that's been highlighted, a couple that have been highlighted are teachers and other staff that are allowed, would teachers or other staff be allowed to apply for unemployment over the summer if the summer programs that they're working on are canceled?
Yeah, that's a question for local labor council.
Yep. Beth Mosley from Holbrook, do you want to ask your question about ambulance services and the stimulus?
Sure. So yesterday the topic came up because a couple of towns are now receiving funds from Health and Human Services. It's titled stimulus on the advice of credits that they're getting. So looking into it yesterday, we were all discussing it, and it looks like it's part of the CARES Act for any town that has ambulance services. But there really isn't a consensus amongst town accountants of how this revenue should be treated, as far as if we have an ambulance receipts reserve, should it be posted there just as a revenue source? Are we supposed to be putting expenses against it? Should it be general fund, etc.?
It's the first I've heard of it, so let me get back.
Great, thank you.
And you said that's part of the $2.2 trillion CARES Act?
Some of the legislation that some town accountants were forwarding me yesterday did have it as part of the CARES Act, but specific to ambulance services.
All right. I'm sure the answer is easy. I just don't know because this is the first I've heard of it.
Sure.
Rich Viscay?
And is it?
Rich, are you there? All right, so I'll ask this question for him. He's asking if you can legally pay for contracted services that aren't being performed, such as special ed transportation and out-of-district tuitions.
All right, so let me start off by saying that I know different versions of legislation are being discussed by the legislature and the administration because obviously that letter that went out at the end of March from the DESE commissioner prompted a lot of questions. If you talk with DESE, they will tell you that, and not just DESE, but others, that they will tell you that a lot of the specialized services for special education students are being delivered. You know, the day placements, the out-of-district placements, full, you know, the kids that live there, those services are being rendered. So that's a discussion you need to be having between the schools and the town or the city about what services are actually being rendered. Then there's some in-district special ed services that may or may not be delivered, or might be being delivered in a different way than originally anticipated. That's something also I think you need to have conversations locally about, you know, what services are actually being rendered. And then the transportation, I mean, if you look at the statutes that speak to services being rendered and payment of those, if it's not being rendered, it's not paid. But what we're working on is language that would address all of these things a little bit more comprehensively.
Great. Another question came up, Sean, is about the applicability of the 112 budget to apply to capital budgets. I think there's an appreciation that it's applying to operating budgets, but is there any consideration to having it apply to pay-as-you-go capital budgets?
So in an overly simplified way, here's how the 112 is probably going to work. We're going to say to the community, give us what you believe your 112 budget is, all right? And we'll, as a starting point, look at the total amount to be raised from fiscal 20. Divide it by 12, and that would be our threshold, so to speak, all right? And that would be what we compare, what you submit to us, because if you read the legislation, the select board in the town and the mayor in the city need to submit that to us. And as I said to my team here as we were going through this, I said, if I were back in Brookline, we'd be sitting with the comptroller and we'd be going line item by line item. What expenditures do we need in July? You know, because we're going to have Quinn payments to make, we're going to have hazmat payments to make, pension payments to make, debt service payments to make. So I'm going to craft that budget like I would any other budget. And then the comptroller puts it into Munis or whatever your financial system is for that 112. And then you post those expenditures against those. It shouldn't be a wild west in your financial system as to, you know, you're just posting bills against nothing, right? So you submit a number to us. Again, it's got to be at least 112. If it's, using a bad example, but if it's half, we'd obviously have a conversation with you to figure out why you think you need half of your expenditures out the door in July. If we think it's a little light, we'll have that conversation. But if it passed the quote unquote smell test, it's it. We're going to sign off on it, send you a letter back, say, go ahead, there's your 112 budget spent. So to get to the capital piece, again, putting my Brookline hat on, we had a pretty robust pay-as-you-go capital plan, funded mostly from free cash. The danger is if you, as part of your 112 budget, put in, you know, a bunch of DPW heavy equipment or a dozen police cars or, you know, whatever the capital outlay is, and you go and buy it, and then you go back to town meeting finally in July-ish, what if town meeting says no? That's a problem. So if I were in your shoes, I would really be doing, as difficult as it would be for me in the way that Brookline's policies were structured and everything, it would be operating budget, you know, maybe with some limited capital outlay in that if you have, you know, PCs that you need to get or laptops, whatever it might be. But I personally would defer anything major on a pay-as-you-go basis. But if you all disagree and you put that into your 112, we'll have a conversation about it. In terms of big capital, you know, if you're talking about a bond authorization, well, actually that wouldn't impact it because you need the bond authorization first. So forget that. So if you're talking about kind of smallish pay-as-you-go capital, my concern would be if you build that into your 112, and you go back to town meeting and they might say, well, wait a minute, I don't want to lay off cops. I don't want to lay off teachers. I don't want to do this. I don't want to do that. Forego all your pay-as-you-go capital. You just, you know, bought them, which would be problematic. So I think you really need to think about how you treat pay-as-you-go capital.
Yep, absolutely. Thank you, Sean. Marion Bellingham, you have some questions about state aid projections, 9C cuts, and MSBA payments? Mary, are you there?
Sorry, am I muted? Can you hear me?
Oh, you're all good. Go ahead.
Hi, Sean. How are you?
Good, Mary. How are you?
I'm good. I'm good. So, Sean, I much like everybody else, am struggling to put together an FY21 budget that we have some confidence in, and a couple of things that we rely pretty heavily on. And I don't know that you can give us, you know, definitive answers, but we're concerned about finishing up the rest of the year for FY20 and whether you think that we should be preparing for any 9C cuts. Looking forward to next year. should we have any trepidation or any concerns regarding MSBA payments that we're scheduled to receive for FY21 and FY22? And my third part is any specifically about MassWorks grants. Should we have any concerns or trepidation about any grants that have been awarded and not yet executed? So if you can give us some guidance, perhaps, or some direction on those particular issues as we're putting together our budget.
All right, first piece, fiscal 20. I'll echo what Secretary Heffernan said on a call last week, that there's no plans in place right now, obviously. But what he said to officials on the call was that, first of all, if there were 9C cuts, you can't touch UGA or Chapter 70. You need expanded 9C authority, as you all know, which is a vote of the legislature. And he basically said that's the last possible option that would be on the table. And he spoke he spoke at length about the strong relationships built over the last 5 years between state, municipal, and that's just not something that would be right out of the chute to balance the state budget. In his words, it was a last case scenario. But again, it would require an act of the legislature to let the governor cut UGA or Chapter 70 in fiscal 20. In terms of MSBA, so we had a virtual board meeting last week, and obviously a lot of talk about cash flow. What does reduced sales tax mean for future authorization of projects? To your question about being worried about payments that are coming or supposed to be coming in either 20, 21, or 22, there was nothing said that led me to believe that they would have a problem making any of those payments. In fact, we gave the CFO authorization to actually go into the short-term market for any potential cash flow needs. There was nothing said at that meeting that leads me to believe that they're going to have problems making payments to existing projects, projects that already have a PFA and construction's underway and that type of stuff. Obviously, with a potentially reduced sales tax number, which is where they get all their money, that could impact future awards. As you all know, you go through a statement of interest process, and then around December, the board, we vote on, depending upon the year, somewhere between 12 and 20 projects. With less sales tax, they might not be able to fund as many projects. So the way I'm looking at that is there's not as much short-term concern as there is potential long-term concern about being able to do the same level of projects, same number of projects as have been historically done. And then the last piece, MassWorks grants, I haven't heard anything about the state not honoring grants that have been executed between the state and municipalities. The issue that I've heard in a few cases is communities might not be able to actually do what was supposed to be done with the grant, whether it was a capital grant or an operating grant. Things are on pause. So if you got a grant to do some park project and it was supposed to be spent by June 30th, that's what I've been hearing more about. Is there going to be the ability to basically, waive those types of requirements? That's something that's on our list to investigate whether it can be done, how it can be done. Does it have to be done with a legislative fix or an executive order, or can secretariats work with you to extend grants on a case-by-case basis? That's what I've heard more about. Not is the state going to basically rip up a contract and say that we're not moving forward with it. I haven't heard anything about that.
Great, thank you, John. Some of the more nuanced questions about the CARES Act, federal legislation, FEMA reimbursement. MAPC is keeping track of all these questions, and we're going to forward to the congressional delegation, who's likely more appropriate to answer them. Some of the more detailed questions related to specific usage of the CARES Act and the FEMA are not questions that Sean is going to be able to answer today. Mayor Fuller, you had questions about part-timers and furloughing.
Yes, thanks, Sarah. Thanks, Sean. Really grateful, Sean, to everything that you've been doing. We're in the uncomfortable position where we have a bunch of part-timers whose work has ceased, and we think there's, for the foreseeable future, the types of jobs that they were doing just aren't going to reopen up. So we're looking at furloughs. Just before we do it, though, we're nervous of whether you know anything about the reimbursements that we're likely to be getting from FEMA, MEMA, even DUA. Are they compromised at all if we do temporary furloughs?
Well, I'll answer that this way, I think. The CARES Act money is supposed to fund expenditures already made that weren't budgeted. Right? So if, you know, that's obviously associated with the emergency. So if you use a silly example, if you're bringing on, you know, if your overtime budget has exploded, it's doubled because you've got more costs and firefighters than you otherwise would have. Those are the types of expenditures that we think would be eligible. But if you're talking about laying off or furloughing employees because you don't have the revenue to support it, that's really revenue loss, which is different. So it's really direct expenditures related. You know, in some communities they've opened up hospitals. You know, in some places, what's it, Revere, Chelsea, I think they basically paying for hotel rooms for people. Those are the types of expenditures I think will be CARES Act and or FEMA related. But I don't think that you'd be able to pay for, you know, part-time employees that had nothing to do with COVID-19 expenditures because you just don't have the budget to support them.
Mayor Fuller, does that cover it?
It's slightly different, Sean, but I understand these nuances. I can take it offline with you. The reason why we have no work for them is we've shut our library. We're unfortunately shutting all sorts of programming for our Parks and Rec folks. So it's not that the revenue isn't coming in. Physical distancing isn't possible. So we're, the work that they normally do literally can't happen during COVID. So it's not a revenue question. It's just there's no work for them. We don't see it changing anytime soon. It makes sense to furlough them. But we're nervous that if we do any types of reimbursements, are often, at least in the private sector, saying, keep your employees on, then we'll help you out. But here we're in a situation where we are laying people off temporarily. Are we risking any reimbursements? We're more nervous about losing reimbursements than actually even getting the reimbursements.
Great.
Yeah,
Sorry, Sean.
I think that, no, I think those types of examples are gonna be fleshed out a bit more going forward. I at this time, I just don't have an exact answer for you. And I get the nuance, but I don't know the exact answer to whether or not those types of expenditures would be reimbursable.
Great. So just one more question that came in from Charlie Doherty in Woburn. Charlie, do you want to ask your question about Chapter 90 and reimbursements?
Yeah, no, thanks. I was just wondering about the timing of the fiscal 21 appropriation for Chapter 90, and also if there's going to be any impact to the reimbursement, the timetable by which we'll be getting any reimbursement for this year's projects.
The first part, I haven't heard anything about delays on reimbursements. So you should continue as always, if you're doing any work, to submit your materials and get your reimbursement. In terms of 21, I don't know the answer to the question.
No answer is an answer. So just to talk and pivot a little bit, Sean, being cognizant of that you have another 10 minutes or so to give us, just wanted to talk a little bit about some of the flexibilities that we're hoping the legislature and administration consider. I know Mayor Curtatone brought up, and it's something that has been fresh on a lot of people's minds around consideration for early retirement incentives, discussions around local aid, waiving some of the statutory requirements related to libraries and staffing. One option that comes up for towns is there consideration being given to allow staff members, or allow select boards rather, to approve a budget in a temporary position versus going to town meeting. I know there's a list of ideas for consideration that are sort of in front of you now. Can you talk a little bit about things that you're looking at and potential considerations?
Well, I think I touched on a few of them. But in terms of some of the items you just raised, like to, I know what the requirement is for libraries, to get your state aid for that program, but I'd just be interested in what a proposal would look like for that. Early retirement, again, this is, I think every recession, this option is considered by folks. And I'll speak like I was back in town hall when we went before the Board of Selectmen and spoke against an ERIP back last time it was offered. If you ask your actuary, do you actually save money? Or to what, how many people can I bring back so that it doesn't actually cost us money? The number was pretty much you had to leave, I think it was 2 vacant for every 3 that retired. And as you know, at a local level, for the most part, most communities are pretty thin. And select boards and mayors want to bring back employees to do the service that needs to be rendered. So if you're letting go people through an early retirement, it's going to cost you more on the retirement front. And then you're bringing people back on and back to those positions, you really haven't saved anything. Plus, you got additional benefit costs on the health insurance side. So, there's pros and cons to ERIP if you structure it the right way. You just can't backfill the people that retired on a one-to-one basis, so you're actually costing yourself more money. So, have we talked about ERIP internally? The answer is no, but I got it on a list of something to talk about. These are all things that would be local options, obviously. What other ideas are there?
Yeah, so I think
thoughts?
Some of the questions that were submitted by folks. So there's a lot of questions that are coming through, and I want to highlight that MAPC is tracking all of these questions. Some of these questions related to FEMA mapping and specific CARES Act and chairs around questions around Chapter 70 and UGA. We're happy to submit to Sean to give some further consideration, but they're not necessarily questions that he can answer in real time. So they're all being logged by MAPC and they'll all be followed up on. Some of the suggestions that we got, Sean, was adjusting the taxation shift, given the ability to tax up to 2 versus 1.75. This is something that happened in 2005, and for communities that rely upon a commercial tax basis and are fearful of having that switch to residential, is it an option that could be considered?
Yeah, I remember that very well. So we talked about this internally a bit, and we're actually in the process of putting something together for localities, local boards of assessors, around existing tools that they have to deal with this. So I understand this is a huge issue because you're going to have the reality versus expectation of taxpayers, right? Whether you're a small business owner or you're a single family owner that got laid off, the tax bill you're going to get is not going to reflect the current reality because they're as of 1/1/20, right? It reflects the calendar year 19 real estate experience, which was upward, right? So yeah, we know that there's going to be a lot of issues locally when, the small business owner says, how come my tax bill went up 10% when I lost 80% of my revenue, as an example. Or the single family homeowner saying, well, we're in the middle of a massive economic downturn. Why is the value of my home going up 7%? So we understand the issue. And what we're going to put together is, I'll call it a reminder of tools that assessors have available. For example, as you know, or may or may not know, the rules are your ratios can be as low as 90% and as high as 110% by property class. So certain types of communities, if you shift, and this is different if you don't shift, but you can, and I mean this in a good in a good legal way, you can kind of play around with the numbers and see where the impact would be depending upon what extent you actually look at market values versus the current climate. You know what I mean? So there are some tools that local assessors can do have that might be able to take some of that curse off. And I did talk to one community about the potential of going to 200, and my recommendation to that community was to speak with other communities that do shift and see if there are concerns in those communities as well, because obviously it becomes a more powerful issue if it's more than one community, right? So if there are a handful of communities plus that have a certain property value characteristic that means it's going to be pushed really hard on one sector versus the other, we need to talk about that. But at the end of the day, and I admit this in such a geeky way, but this was always one of my favorite parts of the annual cycle, was the classification hearing, and look at the public policy discussion around tax burden and shifting it and the pros and cons of it and all that. Obviously, if you step on one side of the bubble, the other one's going to grow. So you might have the business, the commercial industrial side saying, you got to pull back on my end, and then it goes to the other end, which are the homeowners, and who votes? It's the homeowners. So, there's going to be a lot of discussion around that issue, but my suggestion to the community, to anybody who's interested in talking about the 200% possibility, is to talk with other communities that might share your characteristics and raise it through either me or Joanne Graziano, who heads up Bureau of Local Assessment, and she's in constant contact with the Assessors Association. So there's ways to have that discussed, but as of today, it's not something that I would say is primed to go, because there's too many questions around it.
Mayor Driscoll, did you want to on your solution or potential idea?
Yeah, and Sarah, so you know, I need to be off at noon, so I got. Okay.
Great, we've got questions that will keep you till about 2, so we'll try to see if we can narrow some of these down. Mayor Driscoll, did you want to talk about your consideration under federal disaster grants?
Yeah, just really quick, and Sean, you may not have the answer for this one, but if you could bring it back. I think Massachusetts was awarded a federal disaster recovery grant somewhere in the neighborhood of $7 million. And as part of those grants, they allow entities and I think government agencies to hire people short-term, temporarily, to meet disaster recovery needs. And I'm just thinking that might be a source of revenue for those of us who may have to furlough people, to sort of instead reassign them to assist with disaster recovery and other ways to address COVID within our communities. It may also help folks, nonprofits or others that are facing layoffs, to redirect some of those positions and deploy them in a recovery mode. Whether it's cleaning, preparing meals, I think there's an array of activities, and I know we were in touch with our WIB about it. So those workforce investment boards might have some assistance that might be useful to municipal folks.
Yeah, I'm personally not familiar with those grants, but I'll certainly get some information on them.
Great, thanks, Sean. 2 other questions that came in, consideration around charter school assessments for FY21, if there's some consideration being given by the administration, the legislature, for those that have charter schools to sort of flatten out what is often a very large assessment, and then also consideration of restructuring MWRA loan repayments and payments. I don't know if that's something that's on your radar.
Answer to the first one is I don't know. And the answer to the second one is that's not anything the MWRA loans aren't something we get involved in. And by the way, I don't just mean DLS, I mean generally speaking. So that's something that you have to check directly with NWRA about. But if the question more is it something that the state could work with NWRA on, I would just need to get some more information so that I can talk to the right folks about the program.
Great. Mary Ellen Kelly had a question just sort of about, I know it's a difficult question to answer and one that you're likely not ready to speak on, but just talking a little bit about the FY21 budget development process from the state and what we're thinking of, what you're thinking of in terms of local aid, potential cuts to Chapter 70 for towns. Many already completed their budget, as you know, and are either reevaluating or reconsidering. Is there any sort of guidance that you can give us as we make some of these tougher decisions over the next few weeks? Again, I'll reiterate what Secretary Heffernan said to local officials last week. There's no playbook for this right now. Normally, House budget would be at least out, if not adopted. He and his team are working with the two Ways and Means chairs. But I can't sit here and today and tell you either when you're going to see numbers or what the numbers are going to look like. I'll just give an example. I play a role in some way, shape, or form in Methuen and work with the CAFO out there pretty closely. And she asked me, well, what should I do about 21? And I said, A, I don't know what the numbers are. I said, B, but you got to be realistic in your assumptions. And you do have the ability of the 112 budget scenario. So whether you're a city or a town, you're going to have a full town meeting sometime, hopefully, where you'll be able to, kind of true up your budget and put together a real budget. But if I were in your shoes putting a budget together, knowing the economic realities, I would be looking at all my revenue sources very differently than the budget that I put out a month or two ago. It's just the economic reality. And nobody, I think what was clear at that economic summit a couple of weeks ago, nobody can tell you the exact impact because there's no history. There's too many variables. But if I were, in your seat, trying to put together a budget, I would be very conservative, up front, and then hope that there's surprises once the final state budget's put together. I mean, that's kind of the page out of the playbook during every economic downturn as a local budget person. You're better off being very conservative than overly optimistic because it gets, obviously, the further you get into a fiscal year without a final budget, it gets difficult to make cuts, to think about alternative revenue sources and all that stuff. So I can't tell you what to do with your local receipts. If I knew what the real numbers for meal tax were, I wouldn't be sitting here. I don't know what the 21 budget numbers are going to look like, but I think you've all been through this a time or two, and you can use what you've done in the past as a way to think about this, and it's just be conservative. It's really the only advice I could offer. Great. So one final question from Megan Jopp in Wellesley, and then we can wrap it up, which I'm sure will be a series of ongoing discussions with you, Sean. Megan?
Yeah, so my question really is, as this progresses, we need to maintain every able body, particularly with first responders, but other non-union departments like health department, for instance. And what we're seeing is if we start evaluating how this has impacted vacation and personnel time, we're contemplating whether to cash that out this year or a large subset so that we don't have carryover overtime costs. And so curious, as this largely has been unfunded considerations, whether that would be covered by the CARES Act.
I'm not the judge and jury on that, but I would probably say no, but I don't know. I mean, the program hasn't been launched yet. The guidance isn't out, but just remember this, and I should have said this when I first talked about the CARES Act. At the end of the day, the feds are going to audit it. And if you spent some monies for things that you thought were reimbursable and post-audit it's not, you got to give the money back. So my advice there is to be upfront, very careful, very anal about accounting for all these expenses and making sure in your financial system you've got it set up so that there's some tag on it. Memos to files about why you spent things on COVID-19 related, all that type of stuff that your auditing firm will tell you what to do. And then be very careful because you're going to be audited. But the exact answer to that question is too early to tell because the program hasn't been launched and the guidance hasn't been put out yet.
Great, thank you. So I think we're all gathering right now that there are more questions than answers, which I think is a sign that I should probably put on my door on a daily basis. That and everything seems harder than it should be. This is the first of many conversations that we're going to have, and MAPC is eager to work with municipalities. I know that the Baker administration is eager to work with us on finding solutions to these problems that grow by the day. So we will log all of these questions. Hopefully we can get answers on as many as we can. Sean, we appreciate you taking the time to talk to all of us today. We know you're a former finance person, so you have a unique appreciation for the fresh hell that everyone's currently in. And if you have other questions, you need to reach out, please reach out to MAPC or you can email me directly and we'll make sure that hopefully we can get a few more answers to go along with the questions for the next call. If we didn't get to your question, please know that it is being accounted for. If we can get an answer to it, we'll get an answer to it. If the answer is we don't have an answer yet, we're going to get that too. But we thank everyone for getting on today. We know this is tough and it's nice to see familiar faces after being so socially distant. So thank you to Sean Cronin and thank you to MAPC.
I just wanted to.
Sarah, if I can just say two things in closing. One, any of these questions that are specific to whether it's chapter 53 or 56 or any other accounting type, treasury collection and auditing, whatever type questions, send them to me and we'll get you answers. I think it's clear that I don't know anything about 21. I don't know anything about how CARES Act is going to come in. So those questions, you're going to get the answer we don't know. But I'm really, really interested. We are, not just myself, the administration is very interested in other thoughts and ideas that you have. I know you sent me something to look at. I know Mayor Curtatone talked about something and Mayor Tyler talked about something. But if you want to handle it centrally through MAPC, or if you want folks just to shoot me their ideas, I'll leave it up to you. But we know that this is a period of it's unprecedented times, like you've heard a million times. So if there's thoughts and ideas that you have that might be even really small, just send them along because we want to know what you're thinking. We want to be able to work with you to put together some other options, local options for you to take advantage of. But I'll be the first to admit, I certainly don't know everything, and I certainly don't know what all the options are. So we want to work closer with you all to get those thoughts and ideas to us. Sarah, I'll leave it up to you to determine how to do that. So any of those questions that are, specific, like the ambulance question, we'll get you answers out very quickly. The other ones, let's wait and see. But want to hear your thoughts and ideas.
And I think it's important to note, a harebrained idea is not a harebrained idea right now. I think we all have a couple that we'd love to be considered. And so creating a centralized question format, I think will be helpful for all of us to jog our own memories of what other people are thinking of. Mark, did you want to say something to close out the call?
All I want to say is a big thank you to Sarah for facilitating. A big thank you also to Sean for participating with the questions you could answer and the questions you couldn't answer. And also a big thank you to Lizzie Wyant and Mark Fine on my staff for their work in preparing for this call. We're going to have more. We're going to have more follow-ups. We may speak with other members of the administration or the legislature to pursue some of the kind of future ideas that we talked about here today. And I know there are many more ideas among finance staff at cities and towns about possible municipal relief and good ways for the Commonwealth and the federal government to address some of these issues.
Great. So this meeting was recorded and we're happy to share it out with interested parties. Mark and Lizzie are going to follow up an email to all of us with their contact information so we can create that centralized repository of questions. So thank you everyone for logging on today. And keep those questions and potential solutions coming. We're glad to hear it. So thank you.
All right, thanks all.
Thanks, Sean.